University of Mumbai, Mcom Sem 4, Corporate Financial Accounting, Question Bank Solution. We are taking the topic valuation of business, problem number 3. So we are going to solve problem number 3. This is a question. The balance sheet of Raman Limited as on 31st March 2022 is as follows. So liability side, we it given equity share of rupees 10 of value of rupees 10 lakh, 10% preference share of 2 lakh, general reserve 2 lakh, profit and loss account 1 lakh, creditors 2 lakh 20,000, provision for income tax 80,000, outstanding expenses 1 lakh 20,000. In asset sides, land and building 10 lakh, plant and machinery 6 lakhs, stock 1 lakh 20,000, debtors 1 lakh, bank 1 lakh. Additional information is given in the problem sum. Land and building revalued at 14 lakhs, plant and machinery revalued at rupees 5 lakh 50,000. So this is going to be market value for land and building and plant and machinery. All other asset and external liabilities are valued at book values. Find out breakup value of an equity share. So we just have to find out the value of equity share. So let's move to the solution of the problem sum. So again we are going to solve this problem sum like a problem sum number 2. We are going to calculate it in a two step. Step number 1 will be calculation of amount available to equity shareholder. Step 2 will be calculation of equity value of a equity share. So in the first step, we are going to stake all the assets at market value. So we take only the tangible asset, and here in a problem sum even only tangible assets are given. So land and building value is 10 lakh, but in additional information they have revalued it as a 40 lakh. So this is a market value, and we take the market value of a assets. So land and building will be taken as a 14 lakh. Plant and machinery is given 6 lakhs, but it has revalued to 5 lakh 50,000. So we'll write it as a 5 lakh 50,000. Then we have a stock. We have to take it as a book value because in additional information it is given all other assets are at the book value. So stock 1 lakh 20,000, debtors 1 lakh, bank 1 lakh. So here when you calculate when you add up all these five assets, you will get your total as 22 lakh 70,000. Next we'll take a less liability. So we are going to take external liabilities. So equity shares are internal liability, general reserves are equity liabilities, preference share is also internal liability, profit and loss is also internal liabilities. Okay, so we are not going to take this four, but in the next steps we are going to take less paid up share capital value. So in that we are going to take this 2 lakhs, but in liability sides we will take first creditors. Okay, so this is all the external liabilities which we are going to take. So we will take creditor, provision for income tax 80,000, outstanding expenses 1 lakh 20,000. So creditor, provision for income tax and outstanding expenses we are going to take. Here the total of liability is 4 lakh 20,000. So once we deduct asset minus liability, we are going to get answer as 18 lakhs 50,000. Less we have to take paid up preference share capital, which is given in the problem sum 2 lakhs. So if it is given, we have to deduct it. So 18 lakh 50,000 minus 2 lakh, we are going to get 16 lakh 50,000. So therefore net amount available to equity shareholder is how much? 16 lakh 50,000. This is the amount available for the equity shareholder. Then we have to calculate in step number 2 calculation of value of equity share, which is this is what we actually have to calculate. We want a breakup value of an equity share. So value of an equity share formula is amount available to equity shareholder, which is 16 lakh 50,000. Number of equity share, you can see it is calculated in the working note. So you can see in the problem sum equity share of rupees 10 each, value of which is a 10 lakh. So 10 lakhs divided by 10, you will get the number of equity share as 1 lakh. So 16 lakh 20,000 divided by 1 lakh, you will get 16.5 per share. That is 1650 will be your correct answer. So value per share under the net asset method is 1650. So this is the answer of your problem number C. Very, very, very easy. Just in the two step you have to calculate. You have to solve your problem sum. First step will be calculation of amount available to equity shareholder. In that you have to take all the asset at the market value. If the market value is given in this problem sum, not given, then you have to take the book value. You have to less all the external liabilities. So creditor, provision for income tax, outstanding expenses are your liabilities that you will take less. You will less paid up share preference share capital, which is 2 lakhs. Then you will get your net amount available to equity shareholder. Then in the second step you have to calculate your value of equity share. So it is amount available to equity shareholder divided by number of equity share. From the problem itself you will get number of equity share. You have to just take the value of the share and the price of per share, that will give you number of equity share. Then after dividing it with the amount available to equity shareholder, you get your value of equity share per share. Okay, so this is your solution of problem number 3. So next part I will solve the problem number 4 from the valuation sum. So please prefer subscribing and click on notification bell icon for the next part. Thank you.